Good evening, Dallas. Good evening. So, what kind of day did you all have today? You know, we did our 2 live trade calls this morning. You know, what kind of day did you all have today? You all should have had a very profitable day. So, a very, very, very profitable day. So, now did anybody catch those US 30s or anything like that? What time are the trade calls? 5 a.m., 5 a.m. and 9 a.m. Somebody say you had a big day. So, no, don't come and talk about no Samsung representing. Ha ha. Do I hear some shade? Okay. Well, I'm trying to get this share going. Give me a second. Let me make sure I get this right. Oh, you got the USD CAD on the buy and the sell. Atlanta, good evening, good evening, good evening. Okay. So it's 5 a.m. and 9 a.m. Monday through Thursday. Monday through Thursday, catching pips together. Those are the live trade calls. And Tuesday and Thursday nights are training. And immediately following this call is a talk with the finance doctor. A talk with the finance doctor. And the talk with, in this call, the market talks and the talk with the finance doctor are the calls that are on YouTube. And of course, these are Eastern Standard Times that I am giving you. These are Eastern Standard Times. And thank you, someone actually posted it in the chat for you. And if you are in the Telegram, it's in the Telegram as well. It's definitely in the Telegram. So, we got to trade, guys. Look, we're supposed to be training. We got to trade. So AUDJPY, we're supposed to be on here training, but we're not gonna pass up some money. So if this is your first time on a call, I'm gonna walk you through what this is. And so drop a 111 in the chat. If it's not your first time on a call, go ahead and cash out. If this is not your first time on a call, go ahead and cash out. I'm gonna go ahead and walk you through what this is. That's AUDJPY. Grab your 10 pips and cash out. So let's use this and let's talk about what this is. So this is AUDJPY. This is a training call, but we are not gonna miss some money just because we're training, right? We're not gonna miss the money. So let's talk about what the cash out is, okay? If it's your first time on a call, let me get a 111 in the chat, because I know you're probably sitting there like, what are they doing? You know, I want some money too, right? You want to know how can I cash out as well? We're gonna walk you all through this and let you know exactly what they're doing. If you're still learning how to cash out, if you are still learning how to cash out, let me get a 222 in the chat. So welcome to the BYOB Cashout, and welcome back to the cash out. So let's talk about it, okay? What you're looking at, and I'm gonna go a little bit slower than we do in the mornings. So if this is your first time on this call, we'll break it down for you a little bit more. And then we're gonna continue walking through this vibrato, right? We definitely wanna walk through this vibrato for you. So what you're actually seeing is you're looking at 3 different indicators. This is the live market, okay? This is the foreign exchange market. You're looking at the market. So now, what you're looking at is you're seeing 3 different indicators, okay? The red literally indicates sales, and the green indicates buys. So you're looking at transactions that are actually taking place in the market. Now, what happens is you make money off the movement. So you're not actually purchasing anything, but you're making money off the movement of these transactions. So how do I do that? It's all about a proper entry point and exit point, right? And I want my 777s when you cash out. So it's all about a proper entry point and a proper exit point. That's really all you're concerned with, is getting in and getting out, okay? So the 3 indicators that we're using is, number 1 is I'm using my stochastic, okay? I'm using my stochastic. Now, my stochastic is a momentum. It's comprised of moving average and your closing price of your previous candles. So always, first and foremost, I want my stochastic first. I want to look at my stochastic first. This is my stochastic. So I'm going to, from 0 to 100, this actually moves. If you can see, this moves from 0 to 100. I'm always looking at these numbers. I'm always looking at this first. So basically, it's this little shaded area. The higher it is, the greater the momentum it creates. The lower it is, the greater the momentum it creates to bounce back up. Kind of just imagine this as bouncing down, bouncing up, bouncing in, bouncing up, right? So this is what I'm looking at. Now, when this is around the 80, I'm looking to sell. When this is around the 20, I'm looking to buy. Okay, that's what I'm looking for. So this is around the 80. That gives me indication that I actually want to sell. That's what I'm looking for. Now, what happens is that's the first indicator. My second indicator is these are what you call Hikinashi candles, okay? I'm gonna make this a little bit bigger for you. These are actually what you call Hikinashi candles. Now, for those of you all who are familiar with trading at all, like you've actually been through the academy, you've looked at some trading before, so you should already be in this trade. So, you know, we're looking at this, then what you're looking at, so if I switch this to Japanese candles, this is what Japanese candles are. So you see the difference. These are a little bit more choppy. You actually have to try to read them and things like that. So now if I'm looking at the smoothness of the Hikinashi candles, all I'm looking for with Hikinashi candles is I'm looking for a red candle with a flat top. Real simple. That means sell. A green candle with a flat bottom, that means buy. It's just that simple. Now, with the PSAR, which is a stop and reversal, when that flips to the top, when I get all three of these indicators lined up, now what I have is I got my stochastic, blue line cross over the red and the downward momentum. You see, I got all three indicators lined up for a sell. Blue line cross over the red and downward momentum. I got a red candle with a flat top, and I got my PSAR at the top. So all three indicators are lined up. I'm gonna go ahead and I'm gonna grab my arrow. So all three indicators lined up, voila, I'm here for the sale, okay? Now, I'm gonna actually go to my 5 minute. So this is it. This is the BYOB cash out in its simplicity. That's it in its simplicity. Valid sale. Now, let's check it though. Let's add a little bit more confirmation to it. Let's give it that added comfort level. I'm telling you, I want my 777. How you make money on a trading call? So let's drop down to the 5 minute. The 5 minute, because it happens first. Remember, each one of these candles, you know, each one of these time frames they're in order. Like, so the 5 minute happens before the 15. So because the 5 minute candle happens before the 15, that means that I need my 5 minute to be happening first. So this still needs to still be selling. So when it's actually flipped down, right? When it's actually flipped down for the sale, what I was looking for is I needed this to still be selling, okay? It was. So because it was still selling, what I'm doing now is what's called time frame confluence. So it flipped down and so it's still selling. Now I want to check the hour chart. How do I know it's the hour chart? You already cashed out. How do I know it's the hour chart? I know it's the hour chart because of what's called a factor of 4 to 6. So just remember, put it in your notes. It's the hour chart. If you know, that's a little multiplication, factor of 4 to 6. So what we had here is it wasn't ready. So it wasn't ready. So now if I go back to my 15-minute chart, that's why we didn't take this trade prior to the call. So now that's why that's the first thing we looked at when we got here. Remember on the morning calls, or you've been on any other call, like sometimes you just have to have a little patience. So as soon as this call got ready, it was just 15 more minutes to the next candle. This is the next candle. I go back to my hour. What happened? I got a nice solid red candle. Time frame confluence. Nice solid red candle. So now the swing of the market is telling me, my swing of the market, right, is telling me that, guess what? Because the higher time frames really tell me where the market's going. So my swing of the market saying, guess what? It's in a sell. So because I know the market's selling, right, the market's selling, then guess what? I'm in that sale. So somebody's already cashed out. So somebody already got her 10 pips and we're out of the market. So we got a 10 pips and out of the market. Now for those of you all, so guess what? My higher time frame, and it's good, JPY is finally selling. My higher time frame is also in the sale. So what does that tell you? And my 4-hour, my stochastic is actually at the top. So you can grab more than 10 pips, but you know, it's 10 pips to cash out and we going with it. So let's see. Yeah, it break this support line. You know you can get down here. So you already got 10. So some of you guys should already have 10, but it breaks this support line. Let's look to the left at the market structure. So you can do a take profit. You know you can do a take profit for at least down here. Of course, you secure your profit, so you get another 15 pips out of that. Any questions? Questions, comments, questions? Just 777s, right? Okay, let's keep going. So what we started doing is using a vibrato. And don't look at my coloring book, looking at that. So the distance on the stochastic on the 4-hour is how far I can go. What do you mean by the distance? We back on the trade. What do you mean by the distance? You're talking about from here for it to go down to here? So the 4-hour stochastic is going to close. Right, this 4-hour stochastic is going to close. So now how does this trade go down? You've seen some of them. Hold on. Let me see. Make sure your phones are muted. Hold on. Okay, got it. So let's just make sure we keep our phones muted for the integrity of the call. So all right, so technically, yes, it can possibly come down to about right here. Absolutely. So you're looking on a 4-hour chart and you're looking at it. So that's just possibly, you're looking at it possibly closing down to right here if you're trying to look at it on the 4-hour chart. But if you're trying to trade it off the 4-hour, I would definitely look and see what the daily is doing. So now you're looking to see what your confluence is on the daily. So let me see, you gave me a 73.20. Now look at where that number falls, all right? So I want to check that number. So that still falls around the same. So yes, this trade, you're looking at it falling down here. So that's absolutely correct. You see how far I can go? How it closed all the way out? Now it depends on where you're taking your confluence from. If you're trading from the hour, now if I'm on a 15-minute chart, my confluence is on the hour. If I'm on the hour, my confluence is on the 4-hour. Y'all trying to trade and not train? If I'm on the hour, then my confluence is the 4-hour. If I'm on the 4-hour, then my confluence is on the daily. Right? You see, let's train and trade. So you see it? So it depends on what time frame you're trying to trade off of based on if you're trying to do swing trading or if you're trying to be in and out of the market. What are you looking for? So this is definitely that potential setup. Now you cannot flip between all the time frames. You cannot do that because they will not be confluent. So if I'm looking at all the time frames, right, you're never gonna, now let me not see, yeah, you do get analysis paralysis. You'll overanalyze. You cannot, when, think about it like you got the golden ticket. If I have confluence from the 5, the 15, the 30, the hour, and the 4 hour, if you have confluence across every time frame, that's, you know, that's like that golden ticket, and I'm just gonna ride that out as far as it can go. You know, that if when the charts line up like that, that's that golden ticket. So if you are flipping between every single time frame and you are trying to get that lined up like that, that's you're gonna limit your trades because you're not gonna get the charts to line up like that. So if you're, because I mean, look at where the 5 minute is. Okay, the 5 minutes at the bottom, the 15 minute is at the bottom, the 30 is in the middle, the 1 minute is in the middle. I mean, the 1 hour, I'm saying 1 minute. We didn't look at the 1 minute. The 4 hour is at the top. So there's a reason why, you know, you use that factor of 4 to 6. There's a reason why from the 15 you check the hour. From the, you know, the hour you check the 4 hour. The 4 hour you check the daily. You cannot flip between every single time frame. You can't do it. You see what I'm saying? Because you'll be so busy analyzing, you won't trade anything. And the goal here is to make money. And that one's still going up, so we're gonna leave that one alone. So, well, I do want that one. So you said GA. Supposed to be using the web analyzer. Oh, y'all must have had a really good day, because sometimes you guys, I'm like talking to myself. Oh, y'all know tomorrow Friday we don't have a call tomorrow. Is that what it is? That, oh, and GA has confluence on the hour and not just the 30 minute. So understand that a GBP pair, you get confluence. You actually had, there we go, somebody else may have cashed out. So GBP, you actually get confluence. Let me see where my support and resistance line is. So it's already pushed past it. So this is actually pushing past that resistance line. So you can kind of see where that line is, it's pushing past it. So check my trade. You know, if y'all trade, I gotta trade too. I'm not gonna miss it. So, all right, so it's already pushing past it. So, ha ha ha. We're gonna get you an iPhone. We're gonna get you an iPhone. So yeah, so it pushed past it. So yeah, you know, GBP, you'll get it. So if you're not already in it, I mean, look at this. You got confluence. See, this is what I meant. So, well, the confluence is over, but you can see GBP, this GA has been pushing up. So it's starting to get some little curve. So I wouldn't do, it still got that push up on it. Oh, now y'all, there you go. Y'all cashing out now. Oh no, look at the stochastic. It's still pushing straight up. So when you see the stochastic, you know how I said it has to have that curve? It has to have that curve. This doesn't have a curve. It has to have that, it has to have that curve. If it doesn't have that curve, right? If it doesn't have that curve, so what do you mean? What do you mean you keep doing it wrong? Or what are you not, what do you need assistance in analyzing? I'd rather, let's word it like that. What do you need assistance in analyzing? Because it's a new 4-hour candle, and that's still pointing straight up in the air. So that's a brand new 4-hour candle. See, this one just started. This 4-hour candle just started at 9 o'clock when we got on there. No, but there's something specific that you're asking. It's got to be something very, very specific. So if you're just learning how, like, okay, so this is a little bit advanced, okay? Understand this is a little bit advanced. So if you're just learning the BYOB cash out, stick to the way we just did the AJ, you know, the AUDJPY. If you're just learning the BYOB cash out, stick to the way we just did the AUDJPY. Just stick to that. So this, like looking at this trade, this will come as you advance in your skill set. So don't try to jump, right? Just like you learning how to swim or you learning how to do something, you know, that will come with the skill set. So I don't want you to just try to jump in there and, oh, I got it. No, 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 no. You don't jump in the deep end. You get in there first with your flotation devices and everything else. That's your demo account, right? Making sure you understand it. 15-minute chart, in and out, 10 pips and cash out, making sure everything is in alignment. So, oh, most definitely don't give up. You're talking about $6.6 trillion a day being traded, you know, and so let me tell this testimony. I got to share this because somebody shared something, you know, somebody shared something today. You know, they stayed diligent, and they had a very successful trading day today because they just literally, you know, they got past it, they got dedicated, they got on the charts, they studied, and they were so excited because they literally just stayed the course and they learned the skill set, and they had a very successful trading day today. And I'm so excited for this individual. You know, I'm so excited for them because, you know, they just made a decision that they wanted to learn the skill set, and that's what they did. And you got to start with those affirmations. I'm a master trader. I'm a master trader. And I tell you all see me on this screen, and I'm teaching, and I created a strategy, but that's not where it started. But even when I didn't know how to trade, my journey started with, I am a master Forex educator. That's what I used to tell myself when I was still trying to figure out how to calculate pips. I was like, what is a pip? You know, so understand that, you know, it's all, your mindset is what's so important, because I knew I would master this. I knew that I would master it. And so now here we are, and you guys are cashing out. So yes, start with the stochastic. You start with the stochastic. Always start with the stochastic. You always start with the stochastic. If it doesn't have that curve, if it does not have this curve, if it doesn't have this curve, it has to have this curve. So like right here, it's going down. That's something you should have sent. That's something you should have sent on private, because you know I'm gonna read it. I'm gonna read it out loud for everybody. So this stochastic right here, this stochastic is still straight down. So it's around the 20. So it's not about to buy it because it's still straight down, to answer your stochastic question. So right here is going down. So we're looking at this. So we're actually looking for a sell. So what's my hour saying? My hour is in a sell. Look at this. So my hour is in a sell. My 15, there you go. Thank you, because I was definitely about to read it. So now you looking at this as a sell. So it's already pushing down. My 30-minute is in a sell. My hour, now you can kind of see where it's sitting on the top of that. It's sitting on the top of that support line. But let me see what my 5-minute. So everything is sitting on the top of that support line. So whoever called this, if you might get a little pushback, you can kind of see before you jump, because you can see even if you don't understand support and resistance, for those of you all who haven't gone through and started learning the support and resistance lines yet, can you just visually see where this is not, this is a, you know, this is training. Can you visually see where it's just like it doesn't look like it's pushing past? Can you just visually see that look like a line? Like it's just not pushing down. Can you visually see that? Okay, so because of that, that's where we start saying, okay, we kind of want to let it start pushing. You know, you can kind of see us at that support and resistance line. That's what we're always talking about. That when you see that, so if you think about checkpoints, you think about way stations, you think about, you know, that's where my mind goes. I told you, you guys hear me say all the time, I was a logistician. So when you start thinking about doing routes, so you think about, that's where those orders are being placed. So this is where all of that happens, right? This is where all of that this is where something's turning around. So it's checking, it's like it's checking, is hesitating right there. Or, you know, because it looked like it's getting that turnaround. So this is a reversal. You look at how this, it was coming up and now it's reversing. So is it going to push past this point? So even if I'm looking at these numbers to the side, you can kind of see where it's kind of got that. So that's why we didn't jump into this one. You know, this is why we didn't just jump into this one. And you notice that, you know how I tell you your momentum where it starts, but then you notice we got pulled back and then momentum came down, but it's already back down at the 20. But where did my trade go? My trade still hasn't moved. So those are the things you want to start training your eyes to. So it came down, it pulled back up, and it came down some more. But so you want to start training your eyes there, right? It came down and pulled back up and it came down, but my trade, it never moved, you know? And then if I count my pips from where the trade was good, that's like 8 pips. So you wasn't getting, you didn't get 10 pips out of there. So, you know, it's kind of like, you know, you training your eyes. You see, you're training your eyes. So this, and that's what this call is designed to help you do, is to kind of go just a little bit deeper than what we do in the mornings, to kind of help you train your eyes to see what the market is telling you. So this one is not pushing down. And so why is it not pushing down? And so is it gonna push down? Absolutely. You know, look on this higher time frame. You can kind of see how it's starting to get that reversal pattern. So if you would have gotten in a trade, I didn't want you spazzing out because you're like, well, wait, I got some pullback, and you're trying to figure out what's going on. You know, because you would just have to ride, you would have been just having to ride this out. You know, if you would have gotten to this trade, you know, you'd have just been riding this out if you did more than 10 pips, because you never hit your stop loss, right? Your stop loss is above the PSAR. So I never hit stop loss, you know. If I'd have got in, I'm just riding the wave, and then it'll eventually come down. So you see what I mean? You just have to ride that out. And that's what we're doing. All right, so now it looked like it's trying to start pushing a little bit. So if it does break there, then voila, because you got the confluence across the board. I just try not to push you guys. Somebody else cashed out in trades, and now we got a PSAR flip over here. I try not to put you in those trades too early. We're making money tonight. And see this, okay, so who was that asked that question? Was that, okay, that was Fadia. You asked a question about the stochastic. So this is one that I was looking at right before the call, and you kind of see where I had started marking it up. Now, kind of was looking for maybe the stochastic to cross over, but guess what? It did not. So look what happened. It shot up instead of coming down, right? It kind of shot up instead of coming down. And so, right, had it all nice and marked up, you know, kind of thinking, because I was prepping, looking like trying to get ready, but instead of coming down, so look at what my stochastic is doing. So I did this earlier, and now, but I didn't do it on this time frame. I did it up here. So now look at what happened. So my stochastic on that lower time frame is straight up in the air. And it doesn't have a curve on it, right? So you see that? So when we're talking about the stochastic and the blue line cross over the red, that blue line crossing over the red is so important. We got to have that crossover. So this is so important. This crossover is so important. Got to have that crossover. So if you don't have that crossover, stochastic is always the first thing you look at because it is a leading indicator, but you have to have that crossover. I cannot stress that enough. I don't want you trying to take a trade without that crossover because this is a momentum indicator. So if this is straight up in the air, then that means my momentum is, look at what my momentum is doing. So it's actually going up to 100. So like you guys know, oh no, I'm not, no, we're not buying it this late. Absolutely not. This trade is already gone. So where is it at? So look at where it's at. You see this reversal pattern up here? So what it's doing, okay, so let's talk about that. Let's talk about it. Let's talk about it in the big grand scheme of things. Help you understand this market. So let's draw some support and resistance up here. Now, what is it doing? So what does the market do? What does the market do? Let me get rid of the stochastic for a moment. What does the market do? The market does three things. It goes up, it goes down, and it goes sideways. That's it. That's all the market does. So if the market goes up, it goes sideways, it comes down, it goes sideways, it goes up. That's it. That's what the market does. So you have to know what the market's doing. Now, what else the market has is the market has, you know, the market has these little points that before we talk, now understand when we're talking about support and resistance, I don't care right now about an entry point, okay? We're not even talking about if I can get in the market for a trade, if I can take a trade. No, that's not what we're talking about right now. So I'm talking about if you look at what you see with this market, okay, I'm gonna change this to a line chart because I just want this to be clear. Because what the line chart does is it shows the closing price. That's all it shows you is the close price. It doesn't show you buyers or sellers. It shows you the close price. So it helps you identify, right? It actually helps you identify, you know, where you will put your support and resistance lines. Your support and resistance lines are like your lifeline. I mean, it just helps you understand the market. So looking at where, so now you just see the lines. And I'm gonna just cut the PSARs off for you guys. So I just want you to see the chart. I just want you to see nothing but lines, okay? So understanding this. So now, if I'm looking at these lines, okay, if I'm looking at these lines, I'm looking at these lines, I'm looking at these lines, what do I see? No matter how far I go back in the market, no matter what's happening today, everybody knows right now the coronavirus, the market has the virus as well. So if I go back, you know, because it's heavily impacting things that are going on in the market. But if I go back, no matter where I go, and I'm gonna go to the daily chart just because I'm just trying to help you understand the point I'm trying to make. You're not gonna see, you know, heavily where they are. But no matter how far back I go, right, I'm back in 2018 right now, and okay, so it went down. But no matter where I go in this market, I can look. So back to 17, I can grab this same line. I can drop this line, and the market always pauses at the same point. That is how we determine support and resistance lines. The market always pauses. See, I'm back in 2017. So it doesn't matter, you know, it's always going to pause here. So this is just a point where the market is going to pause. period. That's what happens. Okay, so like, where do I want to put it? It's like, ta-da-da. So where you put it, where I put it, you know, might be two different things. So it really don't matter. So it's like, it's an art and it's not a science, right? Just remember that, because it's like a little zone. It's never going to be a perfect line. So if I come here and you're looking at this, this is definitely, okay, definitely what you're looking at. So now the point I'm trying to make to you with you asking, would you buy it right now? No, I'm not going to buy it right now. Let's go back down to my hour. Okay, I'm gonna drop back down to my hour, and what you see is, like I told you, I thought it, you know, looking at this, okay, it should be time for it to turn. So looking right here, if I look left, what is the market doing? The market pushed up, but where is it going? It should be going somewhere to around this next. Now understand, support and resistance, it's the same thing. So if I say support, if I say resistance, don't get too caught up on the terminology, because the only difference is if I'm moving up, it's a resistance. If I'm coming down, it's a support, but it's the same line, okay? It's the exact same line, very much so. However, it pushed past that point, because it would have, you know, it pushed past that point. Now, look at right here. So I wouldn't get in a buy, because where am I buying it to? So it could it just be going to the next resistance point, right? Could it be going to the next resistance, which is already tapped at? So if it's already reached up, this is where I want you to understand that we're not just jumping in trades. You're taking trades because you understand what the market is telling you. But look, it's already tapped it. It's already tapped the resistance line. So, you know, it's a market structure. It's just it's a structure in the market. That's all it is. So it's just like, it's so many different structures. So when you get up here and you tap this, it's already tapped it. So does that mean, so being that it's already tapped it, is it going to touch it again? Who knows? It might not. Is it going to, you know, is it going to push past it? It might not. You know, is the momentum going to carry it there? So you don't, once the market start doing that, you don't buy it, you let it settle and determine what it's going to do, right? You don't want to, you let it settle and determine what it's going to do, right? That's what you do. So that's what you do. All right, so that makes sense. No, the same way we were looking at that other trade. The same exact way we were looking at that other trade. The same exact way we were looking at that other trade. So that's what you'll be looking for. So you see it's already tapped it. And as you can see, where is it at? If I look at the lower time frame, right? And now look what it's doing. So when I come down and I really drill down into the lower time frames, you can kind of see that it's down. No, look at what we're doing. You see I'm drilling down right now. So it's not necessarily a wick and it's done. You drill down and you actually see, what it's doing. So it touched it and now it's pulling back down, right? So let's cut my PSRs back on. We're giving my stochastic back, right? And you can kind of start seeing what is happening on a lower time frame. So it touched the line, what I always say, it tests the line first and then it starts pulling back. So any questions on this? Like what I just covered? Because I kind of know it was a lot. Any questions? All right, so let's see. Ah, awesome, awesome, awesome. Okay, so did anybody stay in that gold? That's all I want to know. Did anybody stay in that gold trade I called earlier? Nobody? Because it's almost there. It's right there. Yes, I did. Um, oh, you got to put your name back on there. And then somebody said, hi, Tasha, but it said 19548. So I don't know who that is. But hello, hello. We just did, what was this? That was, can you go over the, oh, the wicks on the candles, the wicks? Okay, so pretty much okay. And then, so looking at this one, so okay, so looking at this, okay, the wicks you really need to be concerned about are the wicks on, if it's a wick on the top, like if I'm selling, if it's a wick on the top or if it's a wick on the bottom. So if you look, and if you let's look at this. So if I'm looking at this, like the underlying candles are the Japanese candles. So these candles you have to try to interpret, like, and try to read. Oh, I got an engulfing candle. I got a tweezer top. I got a tweezer bottom. I got a doji. I have this. I have that. Right. All these different things with these candles. But when I'm looking at these candles, so okay, you with these candles, you still have a open, a close. You still have a body and everything else. But the reality is these are trend candles, and these are still, they're gonna extend to the duration of where the candle actually exceeded to. So they're still gonna extend. So that's why, so you're really not that concerned with what happens on the bottom of that candle, because they're still going to extend. But you still see the top part is, if the top is flat on a sale, the top is flat on a sale, then this is where, you know, the top part is flat on a sale. That means you have a strong downtrend. Okay, no wicks on the top, meaning that there's not that much underlying buyers. Okay, if the bot on these candles on a buy, if the bottom is flat, like the bottom is flat here, there's really not that much underlying sellers. So you have a strong uptrend. But the wicks, because you know, the more body of the candle, of course, the stronger the buy. But the wicks, it means, that just means how it extended out. So I'm really not that concerned with the wicks on this way. I'm more concerned if I got wicks on the top. So like these have wicks on both ends. That shows consolidation. That's what that is. Okay. All right, so let's see here. All right, so let's see. So you're asking about this trade. So you got stuck in them as a buy, but I don't know where you got in them at. Yeah, I don't know where you got in them at. So where did you get in EuroCAD at? Is this the same markup? I need a number. So it's pushing up still. So this is that gold trade. So you see it kind of slowed down a little bit, but it's still pushing. So, and this is just those two highs. Well, I wouldn't get in it now, but these are just those two highs. So you see it's in that pullback right now. I wouldn't get in it now, it's in that pullback. So you got in this. Is that too many fours I typed? 1, 4, 4, 8. What day did you get in this? How, you said last week. One thing I can tell you is you didn't use a stop loss. I can tell you that. So let's talk about the risk management of the stop loss. So I'm going to use it as an example because I get this question a lot. So I am definitely going to use it as an example because I have had that question. So please use a stop loss. And I'm gonna tell you because now, you know, I can't, and I'm only saying this because this is a perfect example. Now we're gonna talk about this trade, but this is a perfect example. I've heard it so many times, it's been brought to me. So now we're talking about 172 pips. So, you know, I've heard it so many times that the trade will turn around, right? I'm gonna wait for it to turn around. So I don't use them. And instead of 10 pips, 20 pips, right? Instead of, you know, 8 pips, 10 pips, right? At a loss, a stop loss, you know, we're looking at 172. But I'm looking at this with this strong downtrend, and I'm wondering why you took it for a buy. Let's. On an Android, there is okay, so on an iPhone, who been throwing me Android shade? This is my time to get you back. So on an iPhone, it literally is tell you stop loss and take profit, right, on there. But on an Android, when you do your trade, it'll say it has a green line and a red line, if I'm not mistaken. It just has a green line and a red line. Yeah, I know that's you, Michael. But it's a green, and so is that correct with the green line and the red line? Because I know I pulled it up on the thing, but I believe it's just a green line and a red line. And so for your stop loss and your take profit. Now, what I will tell you is that if you enter it wrong, it won't accept it. I do know that. So if you enter it wrong, it won't accept it. So now I can't see. Now what I always do is I enter my trade and then I go back and hit modify because that helps with pip reaction time. So now what I don't see is where you have a setup, because even if I'm looking at the 12th, anywhere on the 12th. So if this was your entry, anywhere around this period right here, I did not have a proper setup. So, well, I'm glad I got to answer you guys' this question. So try it, you guys go try it and make sure you can enter that. So, and I'm glad you asked this question. I'm really glad you asked this about this trade, because you know, you guys gotta follow the setup. The blue line crossed over the red. So in this little zone, let's talk about this zone where we got right here. Okay, let's talk about this zone. We're gonna lock this out. We're gonna lock this area out on the 12th. Because anywhere in here, we had one little candle and that was a correction, okay? So if I'm looking at my stochastic, you know, it had the blue line that crossed over the red just a little bit right there. I had a green candle. You had one green candle in this area, but it had a wick on the bottom. So let's look at this. So this candle has a wick on the bottom. So even if it's a small wick, it's still a wick. Okay, that's still a wick. And then I never had a PSAR flip. So, and I'm pointing this out because I can't tell you how many, I get a lot of messages from you guys. I get a whole lot of messages and a lot, you know, well, I did it. I'm not waiting on the PSAR, right? I'm not waiting on the PSAR. And this is how important that PSAR is. Okay, so even if this was close enough to a flat bottom, this is how, you know, this is how important that PSAR is. Now, let's look at this, okay? Let's go to my higher time frame for some confluence. Looking at my higher time frames for some confluence, this is how important time frame confluence is. So this is how important confluence is. Look at how strong these red candles are. So I don't even have pullback. You know, sometimes when we're on there and I'm like, okay, you know, if you're comfortable with it, you can see it's coming. I got a little pullback. It's a doji candle. Look how strong these candles are. Look at how strong these candles are. You know, because even like if it would have been something like this, you know, this is where you can tap dance around it if you're comfortable with that currency pair. The reason why on the call, I'm like, no, because we're trading everything, right? You know, we're on a live trading call and we're literally trading everything together. So it's not like we're only trading GBP, JPY, or we're only trading EuroCAD, or we're only trading this, to where you're comfortable, like, you know how we just know GBP is going to be okay. I can check the 30, or we know this will be okay with a doji. So once you get to a point you're trading that currency, that's your currency pair. So you know, oh, I know this is good with this doji, or I know this is good on the 30, or I can go check the 45-minute time frame. Like, we don't even look at that on here, but let me go check the 45. Okay. So once you get to that point with the currency, then you can make your own modifications to that. But no, you know, this is a strong, like, look at these candles. And when I said modifications, I meant like looking at this, or, you know, kind of like, oh, okay, this is a small doji candle. I can see it's feeding into that because I understand the way the market flows with this currency pair. But when you look at this, look at that. So where are we at now? We got in a trade that was obviously in a correction. So we are 172 pips in a hole. Euro is weak. Euro is weak. It's down to here. It actually broke the support. Well, I know the Euro USD did. It broke the support. Should it go any lower? You held it this long. Let's see where we are right now. See, I know Euro USD. One thing I will tell you, I know it's kind of hard to close a trade when you're looking at it and you're that far in. So my daily is starting to get a curve, okay? What I can't tell you is your daily is starting to get a curve, okay? Your daily is starting to get that curve. So now you're gonna have, if you gonna have some bumps and bruises along the way, but you might not be trading anything else depending on your account balance and where you are, but your daily is starting to get a curve. So all these other time frames are gonna have to cycle through, but Euro is gonna have to pick up some strength, because I think, which one was it? I know it was it wasn't CAD, but I know Euro was a Euro USD that still had a potential of 350 pips that it still could have failed. Well, we don't have time to go through both of them to analyze them both like this, but oh, it was Euro AUD. I just know one of them we looked at. Yeah, it was Euro USD that still had about another 350 pips that it can in that range before the next one. So what I can tell you to take from this, proper risk management. That's the best thing I can, is, you know, let's use proper risk management. Let's make sure no, all the euros lost strength. All euro as a whole lost strength, but it's gonna be what is paired with. You got to remember that every currency has its own strength. Every currency has its own strength. Okay, so every currency has its own strength. That's why the JPY is so weak right now. But every currency has its own strength. So like USD got real strong. So when USD got real strong, so that's why Euro USD broke it. And then Euro was weak because you got to think what it's going through. They just had Brexit over there. Now GBP got weak really because of Brexit, but Euro is impacted by that as well, because they're going back and forth with trade talks and with different things of how that whole situation impacts that whole region. So you just really, really, really got to kind of pay attention to what's happening, you know, and what's going on over there. So that's really it in a nutshell. So, I mean, plus other things that's happening. And then of course, like you look at what happened today, right after, you know, and because I went back kind of trying to figure some stuff out, is like the coronavirus, it's not there anymore, but like the coronavirus kind of hit, and I must have typed over it, or it's on a different browser, but I know, oh, there it is. So the coronavirus hit, and because we did get up a little bit, and then it's like you got some news of the coronavirus spreading into some other areas, and then it just dropped, you know, and that's what happened with the market today, is because, you know, it just took a nice hit, and that's what can happen with the indices. So everything will take a hit, but you see it more reflected because this impacts the fundamentals so much more. So with that being said, ladies and gentlemen, we are definitely at that 10 o'clock mark. But before I end this call, definitely this weekend, this Saturday, oh, you guys are so very welcome. You guys are so welcome. But before we transition, if you have not registered, this Saturday is our BYOB Expo. It is our expo, and you definitely need to be registered. Here in Jacksonville, Florida. We're talking about your economic equity. So yes, this will be recorded and it will be uploaded, but we're talking about your economic equity. We're talking about empowering you. We're talking about making sure yeah, have a great weekend. I need to see you there. You need to be at this event. This is life changing. This is for you. I want to make sure I see you there. Looking forward to meeting you. Looking forward to seeing you out there. You definitely want to get registered. It's definitely going to be worth the road trip. So, and yes, I'm talking to you. I'm talking to every last one of you all. So you are so very welcome. But I'm telling you, you get anything from these calls, you're going to walk out of that event so empowered, so ready, so on fire, that we are definitely ready to elevate and take this to the next level. So if you are anywhere in the city of Jacksonville, anywhere in the state of Florida, anywhere in the surrounding areas, you do not want to miss this event. It's just that simple. So tonight, make sure you are registered. Awesome. I'm looking forward to seeing you there tomorrow, on Saturday. I'm about to say tomorrow. So, but ladies and gentlemen, it is definitely time to transition this call. It is time to transition this call. It is